Hey, Sip&Talkers, welcome back for another deep dive. It's your host, back with another round of market mayhem. And man, have things been spicy lately.
Spicy is an understatement. It's more like someone dumped a whole bottle of hot sauce into the financial punch bowl.
Okay, that's a pretty good analogy. But seriously, folks, things are getting weird out there. The Fed's cutting interest rates, which usually means the dollar should weaken. But it's actually skyrocketing. Stocks are all over the place, and the bond market is, let's just say it's looking a little paler than usual.
Right. It's enough to make even the most seasoned investors scratch their heads. And just to add fuel to the fire, we've got Trump back in the White House.
Oh yeah, the Donald is back. And you know what? That's exactly what we're diving into today.
Yeah.
Trump's re-election and the financial world's reaction, or maybe I should say overreaction to his return. We've been poring over articles, market reports, and even some of those late-night financial blogs. You know, the ones with the flashing gifs and the conspiracy theories.
Oh, those are always entertaining. But seriously, there's a lot of uncertainty swirling around right now. Some folks are predicting a Trump-fueled economic boom, pointing to the stock market gains we saw during his first term. Remember how the S&P 500 shot up almost 20% in 2017?
I do. That was a good year for my portfolio, let me tell you. But wasn't it also a time of some pretty crazy market swings? I remember the Dow Jones taking a nosedive, plunging 800 points in a single day.
You're absolutely right. Trump's first term was marked by both big gains and some wild volatility. We saw trade wars, unpredictable policies, and a lot of uncertainty about what he'd do next. And this time around, the global landscape is even more complex.
Right. It's not just about the U.S. anymore. We've got this fragmented global economy, rising debt levels, and even signs that globalization might be losing steam. It's like the whole world's holding its breath, wondering what Trump's next move will be.
Exactly. So what's different this time around? Well, for starters, we've got to remember that the world isn't the same as it was back in 2017. We've been through a pandemic, supply chain disruptions, and a whole lot of geopolitical turmoil. Investors are a lot more cautious now.
Makes sense. So maybe we shouldn't expect a repeat of that 2017 stock market rally.
It's definitely not a guarantee, and that's why it's so important to understand the forces at play here. We can't just rely on past trends.
Okay, so let's break down this dollar dilemma. Why is the dollar surging when interest rates are falling? Isn't that well backward?
It does seem counterintuitive, right? But here's where the concept of safe haven currencies comes in.
Safe haven, like a financial bomb shelter.
Kind of. When things get rough in the world, economic uncertainty, political turmoil, you name it, investors tend to flock to the U.S. dollar because it's seen as a stable and reliable asset.
So it's like the go-to currency when everyone's freaking out?
Yeah, exactly. Even if returns are lower, the dollar's perceived safety makes it attractive during times of global uncertainty. And we've certainly had our fair share of uncertainty lately.
No kidding.
Yeah.
It feels like every time I check the news, there's another crisis brewing somewhere. So that explains why the dollar index has jumped from 100 to 108 recently. It's like everyone's scrambling to get their hands on greenbacks.
Exactly. And that strong dollar is creating a ripple effect throughout the global economy. It's making imports cheaper for U.S. consumers, but it's also making American goods more expensive for buyers overseas.
So it's a double-edged sword. Good for shoppers, not so good for exporters.
Right. And it also puts pressure on emerging market economies. Many of them have borrowed heavily in U.S. dollars. And when the dollar strengthens, their debt burden becomes a lot harder to manage.
Oof, that's gotta hurt. It's like a financial hangover.
It's definitely a challenge for them. But let's shift gears for a moment and talk about the bond market.
Oh yeah, the bond market. What's going on there? With interest rates falling, shouldn't bonds be thriving? I always thought of them as the safe, steady, boring option.
You'd think so, right? But here's the thing. A few factors are spooking bond investors. First off, there's this lingering fear of inflation.
Inflation, the silent wealth killer.
Exactly. Lower interest rates can actually fuel inflation, especially when you factor in those lingering supply chain issues. Bondholders are worried that their returns will be eroded by rising prices.
Right, because if inflation is higher than the interest you're earning on your bonds, you're actually losing money in real terms. It's like watching your savings slowly melt away.
Exactly. And then there's the whole U.S. debt situation. The national debt has ballooned to a staggering $33 trillion. And with the government continuing to issue more debt, it could flood the market and push down bond prices.
$33 trillion. That's a lot of zeros. It's like trying to pay off your credit card with a lemonade stand.
Well, it's not quite that simple, but you get the idea. The sheer size of the U.S. debt is causing some concern among investors.
Okay, so inflation worries and a mountain of debt are definitely not good news for the bond market. But here's the million-dollar question. Where should people stash their cash in this crazy financial climate?
That's the question everyone's asking. And to be honest, there's no easy answer. It depends on your individual risk tolerance, financial goals, and time horizon. It really does come down to your personal circumstances. Some people might feel comfortable riding the stock market wave, while others might prefer to play it safe with bonds or cash.
Right. It's like choosing between a roller coaster and a Ferris wheel. Some folks love the adrenaline rush, while others prefer a more leisurely ride.
Exactly. But even with a diversified portfolio, it's important to stay informed and adapt as needed. This is especially true with Trump back in the driver's seat.
Speaking of Trump, let's talk about his impact on specific sectors. We know he's a big fan of America First policies. But how will those policies actually play out in the real world? Who are the winners? And who are the losers in this Trumpian economy?
Well, one sector that's likely to benefit is energy, particularly fossil fuels. Trump's a big proponent of American energy independence, and he's rolled back a lot of regulations that were seen as burdensome to the oil and gas industry.
So less red tape, more black gold?
You could say that. And with energy prices already on the rise, this could be a boon for companies in that sector.
Okay, so oil and gas are looking good. What about other industries?
Defense is another sector that could see a boost under Trump. He's always been a strong supporter of the military, and he's likely to increase defense spending. This could mean more contracts for defense contractors and potentially higher profits.
So if you're looking for a Trump bump in your portfolio, energy and defense might be good places to start. But what about the flip side? Who's likely to struggle under his policies?
Well, industries that rely heavily on imports, like manufacturing and retail, could face some challenges. Remember those tariffs we talked about earlier? They can make imported goods more expensive, which can hurt businesses that rely on those goods.
Right. It's like a hidden tax that gets passed on to consumers. No one likes paying more for their stuff.
Exactly. And those higher prices can also hurt demand, which can lead to slower economic growth. It's a delicate balance.
Speaking of delicate balances, let's talk about the U.S.-China trade relationship. It was a major source of tension during Trump's first term, and it looks like it could be a hot-button issue again this time around.
Absolutely. China is a major economic powerhouse, and the U.S.-China trade relationship is one of the most important in the world. But it's also a very complex relationship with a lot of competing interests.
Right. It's like a high-stakes poker game with billions of dollars on the line. What's Trump's strategy here? Does he want to cooperate with China or confront them?
It's hard to say for sure. He sent mixed signals in the past, sometimes praising China and other times criticizing them. It's possible that he'll try to strike a balance, seeking cooperation in some areas, while also pushing back against China in others.
So it's a bit of a tightrope walk.
Yeah.
He's got to be careful not to tip things too far in either direction.
Exactly. And that uncertainty is making a lot of businesses and investors nervous. They're not sure how to plan for the future when the rules of the game keep changing.
Right. It's like trying to hit a moving target in a financial shooting gallery. But speaking of uncertainty, let's not forget about the U.S. national debt. It's ballooned to over $33 trillion. How is Trump planning to tackle this elephant in the room?
That's a question that a lot of people are asking. His tax cuts during his first term actually added to the deficit, and it's not clear how he plans to reduce the debt this time around.
So it's like he's maxing out the national credit card, but he doesn't have a plan to pay it off.
It's definitely a concern. Some economists are worried that the U.S. debt could become unsustainable if it continues to grow at this rate.
Right, because eventually someone's got to pay the piper. And if the U.S. can't pay its debts, that could have some serious consequences for the global economy.
Exactly. It's a situation that bears watching closely.
Okay, so we've got a lot to think about here. A surging dollar, a wobbly bond market, trade tensions with China, and a mountain of national debt. It's enough to make your head spin.
It's definitely a lot to process.
Let's circle back to this Trump effect for a moment. There's one big question that keeps popping up in our research. Is this America First approach going to help or hurt the global economy in the long run?
That's the billion-dollar question, and the answer is, well, it's complicated. There are potential benefits and drawbacks to consider.
Of course it's complicated. When is anything in economics ever simple?
You're telling me, but here's the thing. Trump's America First policies, like those tariffs he's so fond of, can create friction in the global trading system.
Friction like a trade war.
Exactly. And when countries start throwing up trade barriers, it can disrupt supply chains, raise prices for consumers, and ultimately slow down economic growth.
So it's like a global economic tug of war.
That's a good analogy, and no one really wins in a tug-of-war. Everyone ends up tired and frustrated. But on the other hand, there's an argument to be made that America First policies could actually benefit the U.S. economy in the long run.
How so?
Well, if these policies lead to more manufacturing jobs returning to the U.S. and a reduction in the trade deficit, that could boost economic growth and create more jobs.
So it's a trade-off, potential short-term pain for potential long-term gain.
Exactly, and it's too early to say for sure which way things will go. It's going to depend on a lot of factors, including how other countries respond to Trump's policies.
Right. It's like a giant game of financial chess with all the world's economies as the players.
And Trump's certainly not afraid to make bold moves. Whether those moves ultimately benefit the U.S. and the global economy remains to be seen.
Okay, so it's a wait-and-see situation.
Pretty much. But one thing's for sure, it's going to be an interesting ride.
Interesting might be an understatement. It feels more like we're strapped into a financial roller coaster that's just starting its climb up the first hill.
Buckle up.
I'm already gripping the safety bar.
Ah.
But speaking of safety, let's shift our focus to something a little more tangible: investments. Where should people be putting their money in this Trumpified world?
It all depends on your individual risk tolerance, financial goals, and time horizon.
Okay, fair enough. But let's play a little game of what if I'm a risk-averse investor who's looking for a safe haven in this storm? What are my options?
Well, traditional safe havens like U.S. Treasury bonds are still a solid choice. They might not offer the highest returns, but they're considered very low risk.
Okay, that's a good starting point. But what if I'm feeling a little more adventurous? Where's the excitement in this market?
Well, if you're looking for growth potential, you might consider investing in sectors that are likely to benefit from Trump's policies, like infrastructure or defense.
Playing the Trump card. But what about those pesky tariffs? Won't they hurt some industries?
Absolutely. It's important to be selective and do your research. Some industries like manufacturing and agriculture could be negatively impacted by trade tensions.
So it's all about picking winners and losers.
In a sense, yes, but it's also about diversifying your portfolio and not putting all your eggs in one basket.
Diversification, the golden rule of investing.
Exactly. And don't forget about global opportunities. Emerging markets might offer higher growth potential, but they also come with higher risks.
So it's a balancing act, risk versus reward.
Always. And the best way to find that balance is to stay informed, do your homework, and maybe even consult with a financial advisor if you're feeling overwhelmed.
Solid advice. But you know what's even better advice?
What's that?
Taking a break from all this serious financial talk and treating ourselves to something fun.
I'm all for it.
Remember that YouTube channel we mentioned, Mickytolife?
Of course, the one with all the whiskey and travel adventures.
That's the one. Well, we've got a special treat for you. We're about to embark on a journey to the heart of Kentucky bourbon country.
Sounds like my kind of trip.
We'll be touring distilleries, sampling some of the finest bourbons in the world, and sharing all the behind-the-scenes stories with you.
Count me in. I'll grab my tasting glass.
Perfect. So subscribe to our channel, join us on our Kentucky adventure, and let's raise a glass to the good life.
Cheers to that.
Okay, folks, we've covered a lot of ground today, everything from the dollar's wild ride to the bond market's gloomy outlook. But let's bring it all back to you, our dear Sip and Talk listeners.
Because at the end of the day, all this financial stuff only matters if it affects your life, right?
Exactly. We're not here to just throw jargon around and make your head spin. We want to help you make sense of this crazy financial world and maybe even make some smarter decisions with your money. So let's distill it down. What are the key takeaways from our deep dive into the Trump economy?
Well, the first takeaway is that we're in for a bumpy ride. Volatility is the name of the game right now.
It's like trying to navigate a financial obstacle course blindfolded. You never know what's coming next.
That's a great way to put it. But seriously, with Trump back in the White House, we can expect more unpredictable policies and market swings.
So buckle up, folks, and hold on tight. But remember, diversification is your best friend.
Yeah.
Don't put all your eggs in one basket. Spread the risk. Explore different asset classes and consider alternative investments if you're feeling adventurous.
And most importantly, stay informed. Don't just blindly follow the herd or trust everything you read on the internet.
Right. Do your own research. Understand the risks involved, and don't be afraid to seek professional advice if you need it. Knowledge is power, especially when it comes to your finances.
Absolutely. And remember, this is just a snapshot in time. The Trump economy is constantly evolving. The story's far from over.
It's like a reality show that never ends. And we'll be here to break it all down for you episode after episode. But before we sign off for today, we want to remind you about that little oasis of fun and relaxation we've been mentioning throughout this episode, our YouTube channel, Mickytolife.
You guys just can't resist, can you?
Hey, we're passionate about sharing the good things in life, travel whiskey, and all the adventures in between. And let's raise a glass to the adventure of a lifetime.
Cheers to that.
And on that note, we're signing off for today. Thanks for joining us on this roller coaster ride through the Trump economy. Stay informed, stay curious, and most importantly, stay thirsty for knowledge adventure, and maybe even a little bit of whiskey.
Well said.
Until next time, Sip and Talkers.